Yo, what's going on, everybody? How we doing? How we doing? Long time no talk. Okay, so this is gonna be a little bit different here. So normally, obviously, I want to be live trading during the week and everything like that, but there's been some life changes that's gonna make me stop doing that for the next couple of weeks. So what I want to stick with doing right now is just making really good content and things like this, where I'm going over weekly price action over the weekend and just breaking things down and then just covering how I approach the market and showing maybe newer traders or struggling traders how to approach and view the market based off of a system that's like proven and trusted, and how to view every single day the same way to keep it as simple as possible for you, because that's it's one of the most important things is just keeping it simple, having a fixed plan, not changing and deviating from the plan. So in all honesty, I really have not looked at price action on the lower time frames this week, due to these life changes for me. So it's like I'm going to be back testing this week with price action that I haven't seen before. So I think it's going to be good. Um, I have looked at a little bit on Tuesday, so I'm just going to be going through that as just like normal, but then carrying out through the week. There was no trading on Monday due to a holiday, so we're going to start on Tuesday here. But let's go ahead and get into the back testing here. And what I do, so this is going to be like a top down, right? How I approach every single day in the week and starting from the beginning of the week on Sunday going into Monday, and just marking out the most important levels for me. So most important levels, as soon as I open the charts going into the trading week, I always mark out the weekly open. I always mark out the previous week high and the previous week low, and any like daily fair value gaps or anything like that. So I start on the higher time frame, right? There's a daily fair value gap right here that I was looking at because Friday had already dug into it, and these highs were of interest to me. So some of the most important highs and lows on the higher time frames that I'm looking at is going to be like within the last 3 days. So the last 3 days daily highs and lows, or whatever is just nearest. Okay, so if I look in like this leg right here, this is the day we're going to be reviewing right here. You have this high, which is Friday's high, and you have Thursday high, and then these highs are equal up here. So all of these are important to me. I'm going to mark them out right here. Friday high and Thursday high. And this is going to take a little bit longer just because I don't have everything pre-marked, but that's kind of the point of this is I'm not going to be worrying about not making this too long so people don't like sit and watch through it. I'm doing it pretty much for myself and for anyone who wants to learn, okay? So Friday high, Thursday high, and these highs up here. What I've noticed on the week so far is Friday has gone into this daily fair value gap. That is where the previous week low is. We have the previous week high up here, and this is where the weekly open is because we didn't have trading on Monday. What we have is these equal highs that are resting below this daily SIBI right here. So obviously there's no reason to try and pick a top or anything because we still have buy side targets left intact, and we just did damage right here, taking out all these lows into a higher time frame imbalance. So there's no reason to expect lower prices. Look for continuations higher. I had notified this in my Discord at the very beginning of the week. If you want to have access to that, it's free. The link is in the description. So once I do that, I go down to like the 4 hour time frame just to see how we are respecting or disrespecting fair value gaps. And you can see right here, obviously, we dug into this big 4 hour fair value gap right here and went higher. Okay. And then we went higher to hit these levels right here. So Friday and Thursday daily high have already been hit. But if we look at this previous week high right here, they're equal highs. Okay, so that's really, really important because it's just going to be the most obvious draw on liquidity for you moving forward. We know that the damage has already been done to the downside, and we're respecting bullish PD arrays. We have this 4-hour fair value gap, and you can even count this as like a 4-hour order block right here because it's in line and did the damage to the downside right here. And now we're moving higher. If we go down to the 1-hour time frame here, what have we done up to this point? Okay, is overnight, I'm always asking myself, what have we done in the previous sessions? So now that we know my draw on liquidity is higher, I want to know if order flow is supporting that. And how I determine that is reading it through imbalances. What fair value gaps are holding and what fair value gaps are not holding and getting disrespected. So if I want to look for bullish price action, I want to see bearish disrespected and bullish getting respected. And I want to see what have the previous sessions done before New York open. So those previous sessions are obviously going to be London and Asia. So combining all of those ideas right there, knowing that my higher time frame draw is higher, right now we're looking up to 8 a.m. right here. Okay, so what have we done in this little form of price action right here on Monday and Tuesday? Is what we know this has gone lower into the 4-hour fair value gap, so we can get this out of the way. I'm always asking myself, is London or Asia, are those lows or highs protected or unprotected? They're protected if they're inside of a higher time frame imbalance, like a 30-hour or 4-hour, and has taken out some liquidity, and they're unprotected if they haven't done that. Okay. So first things first, I'm noticing that this was inversed right here, and this was inversed right here. Let me mute myself real quick. I need to do something. All right, sorry about that. I'm back. So we've or disrespected these hourly fair value gaps, and now we're trading into these imbalances right here. Okay, so with this being the low at this point, I'm asking myself, would I expect this low to be taken? And I would not, because again, it traded into that 4-hour fair value gap right there. This is a session low. So if I pull out my session indicator, this is Asia low. Asia traded it into that 4-hour fair value gap. So I would not want to see this get traded below if we're going to continue to be bullish, right? London low isn't really meaningful. It's just this little low that hasn't done anything. So it could get traded to, but really in my eyes, it doesn't need to. So we have these hourly fair value gaps right here, and I just want to see what are we doing on the lower time frames, right? If we take a look at session liquidity right here, London relative equal highs is resting above. Okay, so you can already start to picture like a market maker buy model forming where we have original consolidation right here and we just start to break down, right? And when we're breaking down, since we're anticipating higher prices, we want to look for what can price break down into to then get that lower time frame confirmation to go higher. And we're already trading into these hourly fair value gaps right here. We open, or prior to open, we dig up into this 15-minute fair value gap, take out this intermediate term high, and then start to dig lower. So what are we digging lower into is we have these hourly fair value gaps right here again, these inversions, also paired with these BISIs right here. Okay, so that's how I'm reading order flow. What am I looking for at 9:30 a.m. every single day or almost every single day is manipulation away from my higher time frame draw on liquidity. So not only do we have these equal highs at the previous week high, but we have relative equal highs at session liquidity right here as well. Okay. So dig down into this hourly, right? This is where I'm going to the lower time frames to look for that reversal pattern, because we're already reaching into my areas of interest. Now I just need price action to really support higher prices right here. And the way I look for that change in the state of delivery is I look for the highest inversion fair value gap within the leg, which is going to be on the 1 through 5 minute time frame. I look for breakers, and I look for order blocks. And I just look, I want to see price start to respect these to the upside. So the first thing right here is this is the last 1 minute fair value gap going down into this hourly inversion fair value gap right here. Okay, so I know this is an area where I want to see price start to bounce higher from. But I'm not going to just go in right away, right? Because we inverse this 1 minute right here, but that's not my highest time frame fair value gap within this leg. Because whenever I start to see us dig into this, I'm automatically going through my time frames right here. You can see we have a 2 minute. So I don't want to try and buy early while we're trading into a 2 minute, even though we already inversed that 1 minute. So I'm just using it to read order flow and seeing, okay, this is a good sign, right? We're starting to break above lower time frame bearish imbalances, but I want to start to see us break above the highest time frame. So we have a 2 minute, we have a 3 minute right here. We have a 4 minute, and then we have a 5. So that 5 minute is your highest time frame. And very simply, all I'm doing is I'm waiting to see us close above this. And you can do one of two things. You can either enter off of the close, which is what I'll do if the risk to reward is good, or you can set a limit right here at the imbalance and then target your liquidity, right? And now if you start to see, this is beginning to look like a market maker buy model. And you want to see within a market maker buy model, whenever I am anticipating like a 9:30 a.m. manipulation, what is the start to a market maker buy model? Is when you have the low risk buy. So if this is the sell part of the model and we're anticipating the buy part of the model, time and price are aligning because 9:30 a.m. manipulation is something we're always anticipating. 9:30 a.m. manipulation, now we start to show signs of the low risk buy by inversing this 5 minute right here. Okay, so you can already start to like picture it in your head of what you want to see with an obvious draw on liquidity right here. Original consolidation, boom, higher time frame inversion fair value gap, start to show signs of moving higher. Hit that 5 minute inversion right here. And I would have gone break even at this 5 minute right here because if we were going to be bearish, we would likely tap this and go lower. And I wouldn't want to keep my stop loss and risk unprotected right there. I would want to just see us blast through that and then start to go towards this high. So this is your 15-minute intermediate term high now because it's the high that was created inside this 15 minute, and then target these relative equal highs right there. So I think a lot of people banked on Tuesday. I know in the Discord I saw a lot of people have success with this day right here. It was a really, really clean setup, just really obvious targets, and then a perfect model present itself. So Tuesday was a really, really good day, and it's always nice when you have an obvious higher time frame draw on liquidity, and then you have internal liquidity starting to like being engineered in line and supporting that higher time frame as well. So relative equal highs with London right here, resting below the previous week high, relative equal highs. So that's always just a really, really good sign that you're going to have a low resistance move higher right here, and that's what we ended up having. So that was the only trade opportunity for the model that I saw in the morning on Tuesday. So I really just want to journal this here. And again, like I did not like go through my weekly journaling yet as usual. I wanted to save it for this. So this is when I'm just taking screenshots and putting it in my journal right here. So I'm really just doing my whole process with you guys here. And I really don't care how long it takes. I'm gonna be chilling here for a little while because I haven't gone live in a minute and just want to be going through price action. So that is literally the process I'm doing every single day, right? Is viewing that viewing the market that exact way. So now I want to go into the next day. I'm only looking at the market from like 9:30 to 11:30. So we can go into Wednesday now. And this is when I haven't like actually looked at the market on the lower time frame. So I looked at Tuesday already, but now we're getting into territory where I haven't looked at yet. So this is going to be good for how I would have approached these days and what I would have taken. So I already got this good. On my second screen, I'm like getting my journal ready. So um, daily log right here. So we're getting into the 28th right here. Okay. So I'm just gonna bump it up to about 8 a.m. candle right here. So these relative equal highs are still intact. This daily SIBI is still intact right here. And what have we done overnight? So we traded lower, respecting this hourly fair value gap. We took out this low right here, which is a 1 hour intermediate term low. This looks like your change in the state of delivery. And so we're disrespecting bearish, taking out sell side, and creating imbalances to the upside. We have an obvious draw on liquidity right here. And this is your 1 hour imbalance. So I'd be looking for like a 9:30 a.m. manipulation lower into that to continue higher towards this draw and this daily imbalance up here. I'm going to see what the 15 minutes telling me here as well. Get rid of this. Oops. So we have these are relative equal lows right here. And it's an internal low. So 15-minute internal low or intermediate term low because it was inside this 15-minute right there. I want to see where my session liquidity is. Okay, so we can really count this as London low. I would not want to see us hit this. And pretty much everything else has already been hit. So now we can literally just wait for 9:30. And I also want to get my previous day highs out here too. So we had, this is previous day high, and then we have these up here, so that's fine. That's fine. Yeah, so we can go down to the 1 minute time frame now and literally just wait for New York open and look for that stab lower. So trading right at this 15-minute intermediate term low here. Excuse me. All right, so I want to see us move lower. Let's get this out of the way. There must be like a 15 or a 5-minute up here. Okay, so there's no 15. There is a 5-minute right here. Closed right at that. And we have all these relative equal lows here. So I would not have taken a trade at the beginning portion of the day. I want to see if there was SMT at that low actually. No, this is generated sell side liquidity, so I would have missed out on that run to the upside right there. And even if we got a close above this 5-minute right here, I would not have taken it. This would have been really good if this dug down because you would see this as the change in the state of delivery, taking out this into our imbalance and then inversing this 5, but we didn't get anything like that. So model didn't present itself, can't take anything there, no worries. Now I want to see how we react to this previous week high right here. So there's a 2-minute, there's a 3-minute. Obviously we could go lower. There's a 4-minute and there's a 5-minute right here. There's an unfilled 5 right here. These relative equal lows, we just swept previous week high right there. Okay, so we literally just tank to targets right there. So no trades taken as of yet. I would want to see how we react to this level right here because just because we tapped above previous week high, that doesn't mean I think we just completely tank for the rest of the week. I still like this draw to the daily civvy up here. But this is already kind of looking like a change in the state with these up close candles. I want to see what the 15-minute looks like. Yeah, this could cause for a steady move lower. I want to see where discount is within this stealing range. Okay. So kind of just going to have to let price go here for a sec. I want to see 10 a.m. What we do there. Is there a 5-minute? No. So we have a 2-minute right there. I want to see if we close above that. This is your 10 a.m. open. And what I like to see with 10 a.m. is like if I'm bullish, I want to see an open low high close. Is there? There's no SMT. Respecting the midpoint of this hourly. Did we close above there? Very, very small close. Oh wait, there's a 2-minute above right there too. Didn't notice that. So I would really need to see it close above this guy. And that would be better actually because we'd be looking for like a 5-minute change in the state of delivery right here too. And then we have this unfilled 5-minute. Is there a 15-minute? Yep. Okay, so let's see if we close above that. That would be my entry. Already looking bad, honestly. Yeah, I would not take it with these relative equal lows here. Okay, so that's out of the question there. By taking this low, that what I was looking for right there just isn't interesting to me anymore. And this price action already looks bad. Look how wicky it is. Is there SMT at that low? No. Is there any lower time? Okay, so there's a little one right there. What time is that at? 10:20. A lot of low resistance liquidity right here. Change in the state. That's your opening range low. Fair value gap. Order block. Is there a 2-minute? Is there a 3? Is there a 4? Is there a 5? No. So this technically could be an entry right here with a stop at this low. I'm looking at this one right here. We did close above that one too. So in real time, I probably would have entered this, and then I would have gone break even at. This is like a nice 1 to 1.14 play, targeting that unfilled 5 minute. Okay, so that would have been a stop loss right there. Yeah, this price action just looks not good. Now we want to take out this one more time. This looks like a low-key another entry opportunity right there. So yeah, there's this 1 minute. It's like risky to take just because you can already tell that this price action is not great with how the candles are. So I'm not too fond of taking this. I would have probably waited for a close above here to anticipate this as the change in the state of delivery. And the 1 minute's the highest time frame right there. So on a close above that, I think I would have entered. Well, now it's way too high up. Damn. So this would have been the trade right here then. We could enter. Okay, so say I entered that right there. What time is it? 10:40. So yeah, I don't think it's terrible. It's just we already took a loss on the day right here, and all this price action looks really bad. So trying to get in and hoping that this is going to be where the price action is going to change and start to be good is never a good idea. So this would be an area where you'd, or a time where you would want to go probably really low risk right here. Um, I'd break even above this high. Jesus, yeah, that price action's terrible. So that would have been two losses right there. Probably like a 250 risk on that first one, and then a 125 risk on that second one, and then I would be done after this right here because this is just god awful right there. Um, but I would still expect to run higher at some point. We can get rid of that because this is just all engineered right here, and there's imbalances left above. Right, there's a 15-minute up here, I believe. Yeah, and we're still trading inside of that hourly and not wanting to see this low get ran through. Okay, well, it looks like it goes up now. Um, we can just look at it. I'm not going to take a trade. This might be a day where people may have went on tilt. Looking at that 1 minute. Okay, so this like would be I would not take this because I don't want to take three trades in a day, especially when they're all back to back to back on the idea of like the same idea. This is 11 a.m. open right here. Change in the state. Really, really tiny 1 minute inversion. But like this would be your idea right here. And then you could target like that for a 1 to 1.5. Probably would have been break even already. Yeah, super, super high resistance. Liquidity run right there. There you go. Yeah, this would if I did take this and I didn't take the like other ones, it would have been a break even trade for me anyway. This is just really, really bad price action. And then ends up hitting that 15-minute, and then I'm sure it kind of just does nothing. Yeah, so we'll go to our hourly right here. Just want to take some screenshots real quick. Okay, 2 p.m. did something right there. Yeah, that's not easy price action though. That's really, really tough. Sheesh. This is Wednesday. Okay, so on Wednesday there was some what do you call it? There was a an FOMC thing, not the actual event, but let's see. Yeah, there was FOMC meeting minutes. So a lot more. It actually makes sense then. A lot more volatility in the PM and AM was really bad. So that could have affected my decision on what I wanted to do in the morning. Okay, so I'm gonna keep this here. Let's do this. So I want to look at this move right here. So it looks like PM was actually pretty solid. Get this off. And then let's, okay, so this is the end of the day right here. So let's start taking some screenshots. Okay, so this 4 hours was meaningful. This 1 hour was meaningful. Because it really just engineered a bunch of liquidity in the morning to then have that manipulation in the afternoon right there. So it's like an AMD scenario. $15-minute. It's your inversion. Get these off. Whoops. All right, so let's go down to the lower time frame right here. See what we got. No, that's nothing I would have taken. Yeah, nothing right there. All right, so this day, probably would have taken one, maybe two losses. I think if I saw that there was FOMC minutes, I would have just anticipated that I got caught in some bad price action and hopefully would not have taken another trade right there. But this is a good, way to journal and backtest that just really bad price action with FOMC minutes in the afternoon right there. So could have been like a one and done day. Just mainly looking at protecting the account at that point. based on that news. So FOMC is really, even if it's just minutes within the current climate that we're in, and like with the administration and what they're trying to do with interest rates and kind of like um, the Fed and the administration kind of batting heads with that, kind of puts some more emphasis on FOMC, anything related. So that kind of makes sense right there. But let's fast forward to the next day. Dang, we had a big move overnight right there. Let's get these out of the way. Oh, I did review this day in my Discord and on the YouTube actually. So if you want to go look at my most recent video on how to read session liquidity or how to use session liquidity to get like better um, like increase your win rate and things like that, and just be able to read price action much better and have your draw and liquidity be right the majority of the time, then I would definitely watch that video because that's a good one in my opinion. Let's start on the hourly right here. We're trading into this daily SIBI. So we had our um, higher time frame objective met right here. And if you take a fib on this wick right here, this wick was important because these three up close daily candles right here took out these relative equal highs and was the manipulation before this several month move lower when everyone thought the world was ending, right? So these three candles were the manipulation before this happening. So that was an order block change in the state of delivery right there for me. Trading into this imbalance. So we had this one right here and this large wick, a part of that order block in line with those. So anytime you have that, it's a good idea to kind of just measure out the quadrants or the midpoint of that, because you can see on this day right here, the manipulation topped out at that wick inside the daily SIBI, like to the tick. This daily candle went one tick above the midpoint of that right there. So that was really cool to see. 4 hour time frame went up, just gauging order flow right here. 4 hour fib rally gap, tapped that, took out this intermediate term low right there. That's what we just went over into this daily SIBI. Now if we get our daily range dividers, haven't reached the new day yet. There we go. Okay, so now we're trading in London, right? Went over this price action and how it was a really good sell setup for the day. This was the manipulation higher. So just reading London order flow right here. Close below that is a change in the state of delivery because it takes out previous day high, right? Now I want to go to the daily to mark out like my previous day low. So again, I'm looking at the last 3 days anytime I'm going into the day. And the only one we have right here that's relevant is this one. But it's also a daily BISI. So we're looking at that one right there. And 4 hour intermediate term low. So this is like 3 different important draws on liquidity for me. But obviously it's very far away, so you're not anticipating that this is going to get ran today, potentially, but it ends up happening um, based off of this manipulation higher in the very early morning / overnight session. So displacement through that becomes your change in the state of delivery on the hourly time frame here. I'm not trading any of this because again, I trade in the AM session of New York, but this is the 8 a.m. candle right here. So take a fib from this low to this high. This is your midpoint. So this is your very low hanging fruit draw on liquidity. If you're bullish, you can wait for price to move here and then move higher. But if you're bearish, either way, if you're bullish or bearish, you want to see a move to that level because you want to see price reach discount. And then if you're bearish, you want to see it hit that and then continue lower and anticipate this to be like a market maker sell model. Um, and then this is like your first higher time frame discount array. So this isn't meaningful to me, but this is because it's below discount, and we want to see price reach discount if it's going to continue higher. So we want to go to New York Open. We have a daily or a 1 hour SIBI right here, which you want to note. And I'm going to get rid of this daily SIBI right here because we know that we're originating from that. So this is one of those areas or instances where I would not want to see London trade back to because it's sponsored or it's protected. How is it protected? Because it traded into the daily BISI. So we have that higher time frame PD array. We took out previous day high right there into this midpoint of the wick, and I'll get that off the screen too, and took out Asia high as well. So we're doing this manipulation leg did a bunch of different things, and we have that hourly change in the state of delivery. So very, very low probability that we're going to be able to take this out because it did so much damage overnight. Okay, so that's one of those times where I'm expecting London high to stay in place. And that's really how you can get good at anticipating the high or low of the day because you have that statistic backed as well that London is going to create the high or low of the day around 70% of the time. So when you have technical analysis and profile starting to, what do you call it? Like prove that and support that, that's how you can, have a really good direction on the day. So if I want to see this hourly fair value gap reached, we have an hourly above right here. What am I looking for in the manipulation or in the morning session during the opening range? Manipulation away from my draw on liquidity. Where do I want to see manipulation reach? Is session liquidity or higher time frame imbalances? Higher time frame imbalances being 15-minute or hourly fair value gaps. We have an hourly fair value gap away from this hourly BISI right here. So I'd want to see price trade up into here. And I believe we also had 8:30 news this day. So Thursday, 8:30, we had news. We had red folder news. And anytime there's red folder news, I want to pay attention to those wicks that it creates because that's important liquidity. In 8:30 right here, what do we have? We have a high, a data wick high, resting below this hourly fair value gap. So I love when session or important points of liquidity are resting below a fair value gap that I want to look for shorts from because it's just a really, really good area where you could potentially see a low resistance run lower. And obviously, I already have some areas marked right here because I did a review. Just one second. Okay, sorry about that. So yeah, we have this data high right here. It's also relative equal highs, so you could even mark that out. This hourly, and I literally covered this exact day in my last trading video. It's a really, really good and more in-depth breakdown. But again, we have all this low resistance right here, liquidity, all this trend line liquidity, resting above where our discount fair value gap, where we want to see price draw to. And you don't even need to be right about your daily bias or anything like that. Like say your daily bias is going long. For me, the way that I trade, and I think a lot of the way that people trade, is they're just looking for the next draw on liquidity. And they're using like session liquidity and imbalances and things like that. But they're so focused on the daily bias and draw on liquidity when they're not needing that because they're not trading like the 15 or hourly time frame or anything like that. They're just trading these lower 1 through 5 minute and entering off of that time frames. And so you're so worried about a higher time frame draw when you just need to worry about what the next draw in liquidity is because you can make all the money you want and like have a good win rate doing that without even having a daily bias, right? I just use daily bias, so I like it's my there's like more support in my reasoning for wanting to go long or short, but I really don't need that, right? Because I'm not trying to hold for our daily objectives and things like that. I'm holding for just lower hanging fruit targets. But anyway, trade up into that data high right there prior to New York Open and start to see a really good move lower right here. So remember earlier when I said for New York Open at 9:30, I'm always looking for manipulation. What if the manipulation already happens prior to that? Like this. We already manipulated above data highs and relative equal highs into an hourly fair value gap. Is there SMT? There is SMT. There's SMT at this high right here. NQ took that, ES did not. So what if the manipulation already happened prior to New York Open? Would you expect manipulation again above this high? Or would you expect it to distribute really fast because the manipulation has already happened? And I kind of cakewalked you into that one, but you want to see distribution happen after the manipulation has already happened. So you're not expecting an AM manipulation again at 9:30 like I usually do. I'm anticipating that it's probably just going to run to all of this resting liquidity without needing to manipulate. And potentially this is the manipulation move, but you can be a part of that, right? You can be a part of that fast move lower because this is just a really classic setup right here. Change in the state of delivery, inversing these. This is your 2022 model, honestly. Order block, fair value gap, relative equal highs taken, and then looking for lower prices right here. So just a really, really good setup. There's this 5 minute right here that it was trading into. But if you're very bearish, you can really just, smack this honestly. Um, just based off of this right here. Like this is a really, really good setup. And then anticipate that this is going to be inversion. And then look for lower. Taps that order block and then just has a really fast move. And where do we reach? That hourly. Okay, so that was a really good AM setup and how you can know when to anticipate manipulation versus distribution at the New York Open. So anytime like if there's New York Open at 9:30 a.m. and you just see price start to run off and you're like, why is it doing that? Why is it just going off? Why was there no like fake move in one direction? Look at past price action and try and find if manipulation has already happened. Because if it has, the New York AM is not going to manipulate. It's going to distribute. So that's a really, really good thing to note right there and how you can be a part of fast moves like that right at the open. And if you anticipate that and you get stopped out, then that's fine. You take losses, right? Losses are a part of the game, but you can get really, really good moves and be a part of fun moves when that happens. And then I believe there was a continuation lower play here. Because what have we done at this point is we inversed this 4 hour. And I mentioned this in my Discord as well. We inverse this 4 hour. So at that point, I'm not looking for longs anymore. I'm looking for previous day low. Because what else is in the way down here that would prevent price from moving lower? There's nothing. There's nothing right here, right? There's just previous day low as a resting draw on liquidity. Respecting bearish PD arrays, disrespecting bullish PD arrays, price action is bearish, right? No reason to expect higher. So you're just trying to, at this point, look for a pullback to get into continuation shorter. Look at this 5 minute that's resting below the midpoint of this hourly. So you're expecting this to act as an inversion fair value gap now. and you like how this 5 minute is below the hourly. So this, are you expecting price to come all the way back up here and hit this? No, because that would tell us that maybe we're not as bearish since we're trading back above this hourly. So this is how you can anticipate breakaway gaps. Is I don't want to see price come up here. I want to see its respect to the lower portion of this hourly fair value gap and this 5 minute right here. So we trade up into that. Big displacement lower. There's a 1 minute right here. Is there a 2 minute? Yes, we inverse that. Is there a 3 minute? No. So this is really your entry point right here. And what I like to do is I like to look at the lowest time frame and look for how, like, are we respecting and creating good structure to the downside? And yes, we are. What does that look like? Is order block and change in the state of delivery. 3 up close candles into the 5 minute and the lower portion of the hourly right here, and then big displacement and breaking through that. So that's a good continuation short that you could be a part of. Something like getting in on the change in the state right here. And then, yeah, I mean, this is your best bet, but targeting these imbalances, right? So if you wanted to target like this, you could do that. We already hit this one. But it's the very same situation up here. What is different about these, right? Nothing. Order block taking out a high into a fair value gap, distribution lower. Order block taking out a high into a 5 minute, into an hourly, change in the state of delivery, inversion fair value gap, SIBI, lower, right? What is different about these setups? Just look for this every single time. It's your high probability setups, right? And then this day, again, we end up running all the way to previous day low eventually. So obviously, if I took this trade, I would not have hit that. I would have gotten like stopped out here at some point, taken the majority of profits off right here in this 4 hour, right? Because look, we hit the midpoint of that, and that's where we have our rejection back higher. But yeah, that was a really good setup right there. So I want to document this as well. So what day is this? This is the 29th. Sorry, this is the part where you kind of just have to sit tight. Because I need this for my own benefit. Oh, shit, I want that daily SIBI up too. And I want the midpoint of this. Let's go to the 4 hour. And this is when I thought we were going to be bearish for like the rest of the week. Well, there was only Friday after this, but still. Because I was looking at this as like a 4 hour change in the state of delivery. 4 up close candles or 5 into the daily SIBI. And then this lower. Okay. Now, normally what I would be doing is writing out everything that I'm seeing right here, but since I'm talking it out and doing a live session over it, I'm not going to do that. But for my journal purposes, I do write everything that I'm seeing out and then take the screenshot and do much more like in detail, um, like analysis and journaling. But again, since I'm talking through it all, that would just take way too long. Okay. All right, that's good. Then I want to screenshot those two entry opportunities there. Good day of price action here. So you're gonna see this type of action like all the time. You just need to be like make sure your draw on liquidity is right because that's when it is like that's when it works, right? This was good too. 10 a.m. open high into this, and then that's when the move lower started. Some manipulation, distribution. Very, very nice. All right, let's get this last day done, then call it a morning. And I do remember Friday ended up being very, very bad price action. Okay. So let's go to the next day here. Go to 9:30 opening. All right, so I did a review on this in my Discord about why this was bad price action and how you could have avoided it. I already know there was nothing for my model presented in this action here, but we can still go through it because I believe I did review this already. Yeah, I did the analysis in the Discord. But let's go through this like I am looking for trades here and show you why there was really nothing to take. So starting from the 4 hour, I want to look at like imbalances and what we've done already. Obviously, we've taken this previous day low and we're inside of this daily BISI right here. Okay, so this is an important area for me on if we're going to continue higher or if we're going to continue lower. I want to mark out previous day low. So again, last 3 days, low, low, and then the third day is kind of just out of reach right there. Four-hour, we have this imbalance here. And again, it's tough because what have we done is we look very bearish based on this structure right here, right? This looks like a change in the state of delivery, like I mentioned before, but we're also inside of this daily BISI. So the daily and the 4 hour are kind of contradicting with each other. So already that's tough. So you could see something like this, tap the 4 hour order block and then go lower and hit this right here. Why is that important? Because that's an intermediate term low on the 4 hour. But we're also in this daily BISI in this area here. And I can mark that out just so we can see the area we're playing with and this order block. So already contradicting. So this 4 hour and this 4 hour intermediate term low is really what I'm looking at right here. But you can see overnight we've done a lot of accumulation at this level right here. So just want to see. There was Trump news at this point where he talked. This was a data high right here. And then it's also relative equal highs. No session liquidity is left intact. So Asia, London, highs and lows, they're all taken. The only thing that's left intact is really this New York PM high. So already that's telling you that since there's no overnight resting liquidity, it could be tough price action. But I would be looking at this right here. Haven't inversed that yet. I wouldn't take shorts with relative equal highs right here. And they're resting below this session liquidity with New York PM high and this 4 hour fair value gap. So any shorts would be low probability to me. Like if we inverse this 5 or this 5 right here, these two, can't take those. It's just lower probability. And if you're looking for like that New York manipulation away from your draw on liquidity, what would that look like? Is if I want to see price go higher, I want to see us go lower. But what are we doing if we go lower? Inversing these. So that's contradictory right there. And is there anything we can go into that we're like manipulating into here? No, because there's no imbalance. There's this big wick that already did the damage, and it's a data wick, so it makes sense if we want to go to that wick right there. No imbalance over here. Asia low already taken, so already that opening range is kind of contradicting with the higher time frames. So we end up going lower, fail to take this data wick. And what are we doing now is we have relative equal lows and relative equal highs. And where are we trading? Right in the middle of that range. So already you just need to wait at this point. You can't get trapped like in the middle of this range and start looking at like, oh, this is a 5 minute BISI right here. Let me wait for price to go back into that to then target the equal highs. Well, no, because we could inverse this and just go tag these data wicks right here, this relative equal low, and then go higher right here. So you could be getting in too premature. We take this high right here. This is your initial high of the day and do like what? 25 minutes of 45 minutes of accumulation right there. So already it's like, it's a very, very tough situation to be in. Now we're in this 5 minute, and I believe it was a 15 minute at this point. Yeah. So you could be thinking at this and going, okay, great. Like we're high above these relative equal lows right here, and we're in a 15 minute BISI, and we have all of this up here. So I mean, price it would not go all the way down here. It should respect this and go higher. You're still trading right within the middle of that range, right? It's just low probability and something where you have to wait for either side of the range to get taken to then see how price is going to react. Because this is where it really tricks you. And you just need to wait for something obvious, right? Because days like this is where it cuts into your P&L by taking unnecessary losses. and you don't let the winning days accumulate and do most of the work in your P&L curve, because you're taking unnecessary losses like this in environments that can, be deemed lower probabilities. So like that's why you don't see this 15-minute hold and you just see price going back and forth, is because we're in that range right there. Okay, and eventually we leave all of this intact and just tank lower. Where to? This 4-hour intermediate term low and into this 4-hour BISI right here. And then this is where price action actually started to get better, is because if you're anticipating this to be manipulation and we've left all of this relative equal highs here and this liquidity, well, you want to start to see how price is going to, react from here, right? And I believe there did end up being, yeah. So very, very small gap that we inversed right there on the 5-minute. That's going to be your highest time frame. We took out this low. Is there SMT? There is SMT. So this is actually a pretty good setup right here. Resting imbalances up above. Right, there's 15 minutes right here. Want to see how 1-minute structure is looking as well. Are we starting to inverse or respect? Bullish. And it looks like we have a, Jesus. Looks like we have a change in the state right here. Looks like we have a propulsion block right here. Look how the 1-minute went and tapped into this 5-minute and starting to move higher right there. So it looks like we're already like respecting bullish on the lower time frames, and we have resting imbalances up here after sweeping a 4-hour intermediate term low and all of this low resistance liquidity right here from the morning, relative equal highs right here, unfilled imbalance, and session liquidity resting below that. So one of those times where you have a really nice end of day run. And we actually left this intact. So the last thing we hit was those relative equal highs. Because yeah, you have an obvious draw on liquidity like this and it's left in the morning, no highs are taken. Really, the only one that was taken was this internal high right here, the 930 high. But it didn't do like enough damage because it just engineered like a triple top right here, right? So went lower. Good PM reversal of New York manipulation lower in the morning. 1 hour or 1 p.m. open low high, inversing a 5-minute SMT at the lows, 4-hour internal low taken. So this was a really good PM setup actually, and how you could have avoided anything in the AM. So that is going to be it, guys. My voice is shot because I'm kind of sick, and yeah, it's just really my weekly review here, and just wanted to get this done because haven't been able to live stream or really trade on the lower time frames here during the AM session like I normally would. But that's going to be changing here in the next couple weeks, so just stay on the lookout for that. But yeah, we'll be back at it soon, and starting to take more live trades. So I'm looking forward to that. Um, but yeah, hopefully you guys enjoyed that. Hopefully someone found this helpful. Um, please subscribe to the channel, and yeah, that's gonna be it. Thanks for watching, guys.